Morning beat, everybody. Happy Wednesday. Hope you're having a good day out there. Everybody's doing good. Welcome to our show. We're financial advisors here at Jazz Wealth. Speaking of which, friendly shout out to the Wells Fargo advisors that stopped by today. Y'all were a freshly dressed pair of, well, it was quadruple. It was 4 people. Had a bit of a show and tell here at the shop today. And so thanks to the Wells Fargo advisors for stopping by. Enjoyed it. We're financial advisors here with Jazz Wealth, not with Wells Fargo. And we just do the show every day to kind of cover the stock markets, how things have gone, give you guys an update as well as our customers as well. We also do classes for customers. If you happen to be one of our clients, you can see in the bottom right-hand corner, tomorrow we're going to go over nest egg. So you just log into the dojo, you check that out. This is the dojo. You can see here. Here's all the classes previously. If you're one of our customers, you can go watch them. But tomorrow at 8 o'clock Eastern time at night, I'll be live right here. It pops up kind of like a movie screen, and you've got the chat and everything in there. You can play along with us. We're going to cover Nest Egg, which is our financial planning software that we use to kind of help you plan. Really detailed piece of software. You don't have to use it, but we're going to go over some of the latest updates, including the Secure Act and different cash flow changes and things like that, as well as take your questions if you're interested. We'll be there at 8 o'clock tomorrow. We'll send you an email to give you an alert. Also, Friday, there will be no closing beat. I'll be in Gainesville up at the University of Florida. If you want to stop by and say hi, I'll be right by the O-Dome for the gymnastics competition up there, taking my daughter. So got a few of you said you want to come out and say hi. I'll be there. Anyways, that's basically all I got today. The markets actually started the day higher and then kind of faded into the close. You got a lot going on, actually. So if we look at the Dow, 9 points to the downside there, 1 point higher for the S&P and 12 on the NASDAQ. That's basically a flat day. If you look at the stock market here on a candlestick chart, you can see we're sitting at these all-time highs, basically, and you can kind of see we faded into the close and then a little bit more here after the close. You've got Davos, so the World Economic Forum going on, so you got a lot of rich people over there telling us how we're doing things wrong and how things need to change. So a lot of headlines coming out of them. The one today that stuck out was President Trump sort of teasing the idea of a tax cut if the Republicans win back. Well, Republicans need control. But anyways, he was teasing that idea, tax cut for the middle class and of course, working class there. So we'll see what happens there. Anyways, the stock market did sell off as we got into the end of the day there. You had some good news. You had new home sale, or existing home sales came in better than expected. Total sales were up 11% year over year. Basically, lower inventory, higher prices. That's the story. The story continues there for the existing home sales. We're going to try something new a little bit later. We're going to do seasonal sector performance. You know how they say, like, oh, Santa Claus rally. This is typically what happens, and everybody's got their stats. I thought, why couldn't we just do that for every moment in time throughout the entire year? Surely there's got to be seasonal performance. You know, we know the summertime is sell in May and go away, but what about times like now? So we're going to go through breaking down the individual sectors in a really clean, easy to see chart so you can kind of see what is the current seasonal performance of the market, or what could you expect in terms of averages, historical performance. So we'll go over that here in a little bit. Let's go on over to the markets and do our sector breakdown. So you've got the financials today. They're still kind of hinting at a possible breakout there. Capital One was the big leader in the space today. They had earnings, so it broke out to new highs there. Earnings beat, had some, earnings beat, revenue missed actually, but it was up on the day, about 4.5%. A lot of positive comments from analysts that said, yeah, basically that's fine. They basically beat earnings. They got everything they needed there. They've got some changes that they're working on in terms of regulatory changes they have to work with there. Loan counts were a little bit low and everything, but all in all, they got a pass from analysts assuming that 2020 is going to be a good year for them. So in the financial space, that's what led the way there. Communication services going to be all about Netflix today. The communication services was a little bit lower. Netflix was one of the weights on the overall sector. The stock dropped about 3.5%, which, as if you know, for their fourth quarter performance, for the stock to be down 3.5%, not a big deal at all. That's a blip on the radar compared to what it usually does. It usually has about an 11% plus or minus range. So for it to be down only 3.5%, that's fine. Earnings beat. They had a lot of comments about competition, a lot of questions from investors about competition from Disney Plus and Peacock and the like. So a little bit of a downside today for Netflix, which weighed on the communication services sector, which happens to be somewhat overbought in the short term if you happen to be looking. Digging around, I happen to also notice Activision Blizzard in the gaming space was lower by about 2% today. No real news on that one, just kind of a lower day for that. Semiconductors got attention for making new 52-week highs today. Earnings helped in the sector overall. Texas Instruments was higher even before earnings came out. So Texas Instruments broke to new 52-week highs there. You got a little bit of a kind of a sloppy breakout people were looking at. That grabbed some momentum today from the short-term traders, but earnings didn't come out until after the close. So you had some buying going into that. Earnings beat, revenue beat. The CEO said that the semi market is actually stabilizing, which a lot of people were trying to bet on when this thing would bottom out, like Broadcom and Intel, etc. So Texas Instruments beating on earnings there. Conference call going on right now, so anything's possible. Taiwan Semiconductors was basically flat on the day. Got a little bit of a boost from some news that, well, it was Bloomberg that put out a report that Apple had asked them to up their production thanks to higher than anticipated sales of their iPhones. And by the way, Apple is looking to launch a less expensive phone, I believe, next quarter. I think it's coming up here. So those kind of things in mind kept the semiconductors at new highs today, looking pretty good. In the tech sector, it's a lot of the same, man. Up 1/3% on the day. A lot of the same old in terms of like Apple being a little higher on the day. We mentioned Intel a second ago. That moved higher. Intel has earnings tomorrow after the close. They got an upgrade from Susquehanna. If you don't know who Susquehanna is, you should research them. They are a complete research firm, data-driven, some of the smartest people on the block, man. They are really, really smart. But that helped Intel move higher. MasterCard was also higher on the day. IBM's, there we go. IBM certainly helped. They broke their losing streak. 5 quarters of missing on earnings and revenue. IBM actually beat on earnings, beat on revenue, and raised guidance going forward. A lot of positive things going on there. We mentioned yesterday their cloud revenues now up to just over 30%, and they expect to see that continue with the new Red Hat acquisition. IBM makes up about 4% of the tech sector. So it's not like a heavy weight there, but it was nice to see them higher for a change. Industrial is a little bit lower on the day. Well, you know, look, it's going to be Boeing. Boeing down another 1 1/3% on that 737 MAX news from yesterday. They also got a downgrade today, and they also said we're going to try to start production again on the 737 MAX before we even have them officially approved to be flying again by the FAA. So I kind of thought that was good news, that they weren't going to just wait. There's a ton of them out there just sitting in parking lots, so it's not like they're going to start tomorrow. They'll probably, you know, they've got a little bit of time there, I would assume. GE was also lower on the day, getting back below the 50-day moving average. They're being weighed down by the Boeing announcement there. Both of those, Boeing and GE, make up a total of about 11% of the industrial sector. So if you want to use like the XLI as an ETF to look at industrials, that's what you have. Caterpillar broke below the 50-day also in the industrial sector in a very aggressive way. Had a lot of stop losses being triggered there. So a breakdown under the 50-day. Caterpillar was recently one that a lot of people were saying, that's a great company. They like the dividend yield, like growth prospects. Caterpillar is also a barometer. I do it every now and then in our portfolio update to kind of show how the markets move with Caterpillar, or the economy is usually measured by Caterpillar and the global economy as well, that big of a company. Also in the industrial space there, I thought this was interesting. Waste Management closed lower by 9 cents. You think, well, that's not a big deal there. Who cares? Waste Management was, up until today, was the only stock in the S&P 500 that was positive every single day since the start of the year. Besides today, it was up 14 days in a row. That's actually a streak for Waste Management. The previous record was set in 2016, 12 days in a row. So Waste Management broke its streak today, trading lower. Now there are no stocks that have been up every single day for the year. So it took 14 days for that to happen. I thought that was kind of cool. I like those sort of stats, you know, just to look at those things like that. Anyways, let's keep going here. We'll move through the list. You got oil lower today by 4%. Look at that, breaking down through that trend line there. We talked about oil being a very oil is a very technical commodity, trades very technically. So I always draw the lines for you to show that. We kind of talked about it breaking above that range, how that's kind of a warning sign rather than a reason to be excited. The break below that was unable to get above it, and so now technical traders are leaning to the downside. I would expect more volatility in the oil space because tomorrow we have the oil inventory numbers. They usually come out on Wednesdays, but whenever a Monday is a holiday, they come out on the Thursday following that. So we'll have inventory numbers coming out. Also, a lot of comments about oversupply today, and then there's concerns about, of course, that virus that's going on out there. Well, because of that, you had XOP, your oil and gas explorers, moving lower. It had a good little bounce off of the lows there, but unfortunately, that seems to be it. It is moving back down towards the lows, and this was broad-based weakness. It wasn't like there was one name that had earnings that drew it down or something. You can kind of look across the board at the names in there, like Apache down 2.7%. Occidental Petroleum is also in there, down 2.3%. If you like looking through these things, Whiting Petroleum, one of the weaker ones, also lower on the day. You could just go through the whole sector and see they were all pretty weak. Looking over at real estate, it finally took a break there. Had a good move off the 200-day moving average. A little bit of profit taking going on today. That was also a broad-based sell-off in the sector as well. Wasn't one individual stock or anything, so that's that one. And your commodities breaking below the 200-day moving average. This is largely oil in various ways, crude, Brent crude, West Texas Intermediate, and some others, but it's all the commodities mixed in there. I thought it was interesting that this ETF, I believe it's an active managed ETF, is now 30+% in cash. So that ought to tell you something about what those fund managers are thinking in terms of commodity prices going forward, or at least what they're positioning for. I don't know that it's an active fund. I'm pretty sure that it is, and they're able to make those decisions because they're normally supposed to follow a commodity index, but they do have discretion to move outside of that, which it appears they have done. So imagine if they were all in with the price of oil today, it would have been a much steeper drop. All right, you got 74% of the S&P 500 above the 50-day moving average. That's down from over 80% last week, so more deterioration coming in there. Probably just a lot of people looking to take some profits there on some of the stocks that have had a great move. But you had 106 new 52-week highs today. About 80% of those closed in the positive today. Actually had pretty good days. Going back over to the charts real quick. Some of them you're already going to recognize. We mentioned Capital One breaking a new highs there. We talked about Intel already. Those were your leaders in the new high list overall. A couple breakouts to point out to you. You got Eaton breaking out to highs there. Not very convincing today, but all in all, decent breakout. Texas Instruments, we already mentioned. They've got the earnings, though, so anything could be happening right now. I haven't seen the latest. And KLA 10 Core, CLAC we usually call it, hinting at a breakout there as well. Your counter trend traders, take a look at something like Pepsi, very extended here in the short term, obviously strong, looking good, just a little bit extended there in a short term. We got to point out Visa, a little bit of a topping tail there today. That is a very parabolic move to the upside. And Cooper, if you happen to like that one, also extended, very overbought in the short term. Cooper up about 0.5% today, but off of its highs, so something maybe to look at. You had 3 new lows today. They were all the same names as yesterday. You had Boeing lower, Delphi lower as well, not by much though. Yeah, 2.75%. That's pretty good. And then of course Cabot Oil continuing with yesterday's sell-off. Yesterday, all 3 of those had very significant drops there. Speaking of Boeing, got a stats play for you. We haven't talked about this in a while because they haven't been really that good. But with Boeing selling off, we thought we'd take a look and say, all right, when Boeing sells off as much as it currently does and is as extended to the downside as it is now relative to any time in history, what is the probability of a bounce? Actually, 61% of the time, it bounces 1.48%. So what I'm going to do, I'm just going to round up to 1.5 if you don't mind. We're going to look here from where it closed. We're going to track it going forward. So we're going to go up 1.5%, which is not asking for very much. That's going to be around 313.78. We'll draw a line here, and let's just see if over the next 5 days it follows its statistical history there of bouncing at least 1.5% or more. 61% of the time that happens when this stock sells off as much as it has done. And I'm assuming some of you would prefer that it bounced because I've seen the emails, I've seen the comments, you guys taking your shots on Boeing buying this dip there. So there you go. There's a stats play. We have not done that in some time, so I was excited to bring that back to you. Usually we do a lot of those, but the problem is a lot of the stats plays were like, okay, 70% of the time it bounces 0.4%, right? So it's just kind of an insignificant risk to reward, or it's not a very well measured risk to reward. You'd never really want to do something like that. Or if you did, you want to hope that you got most of them correct because your losers would likely outweigh your gains. So I don't like to point out too many of those. All right, let's talk about this for a second. Seasonal performance in the overall sectors. Now, hang with me. You know that I try to make things as simple as possible. I am not one who uses big words often, and if I do, they're usually wrong. But let's talk about from today through 1 month later. So January 22nd to February 22nd if we look back 20 years and we look at every single sector in the market, which sectors have the best performance over the next month. And we may even break this down over times to go through the next week and so on, just to have some fun with it. Of course, I'm not making any suggestions of what you should do with your investments. You should, of course, consult with whoever you consider a professional before you make any decisions. I have to say that, and I'm glad I just remembered to say that. Okay. This, first of all, is the chart. So we look at the average sector returns from January 22nd to February 22nd. We are going back since the year 2000 to 2019, all the way through the end of last year. So on the bottom here, you're going to see the average return plotted from left to right, whether it's positive or negative, and each individual sector in the S&P 500. Now, going forward, over the next month, the best performing area is materials, right, with the average gain of 2.6%. The worst performing area is financials, right, and then you got some in between there if you want to take a look and see. It's blurry on my screen for some reason. I apologize for that. I don't know why this font is not showing up clear. It's not just the camera or whatever. It's actually doing that on my side as well. Here's a few things you'd likely want to consider. You look at something like this and you go, well, that's a no-brainer. I got to go with energy and I got to go with materials. Well, remember where the stock market is currently at the moment. It is actually quite extended. So let's say you like a discount and you say, well, I want to stay away from financials because they tend to be weak during this time of year, likely because of earnings. So if we go back over to the chart here and we look through financials, you can see that financials are not necessarily overbought. They would be considered somewhat neutral in the short term, given the last month, since we're only measuring a month forward. They're somewhat neutral. They've been trending sideways, hinting at a breakout here. So you know that going forward over the next month, you've got historical pressure to the downside. If it breaks out, you might want to consider something where you say, I'm not going to give it a long leash, right? If it breaks out and starts to fade, I might consider moving away because I have sort of, historical headwinds, I guess is how you would say it, doing that there. Now, if you like energy, so if we go, let me go back here. So energy is the second best performer over the next month, about 1 point, let's call it 2% gain on the month there. Now, if you look at energy, you go, well, okay, if it is historically strong from this point going forward, then if I were buying it, I'd want to buy it at a discount. I'd want to buy a pullback and hope that these stats continue. So if you look at the price of energy, obviously it's very weak in the short term. You are getting a discount relative to its 20, 40, 50 day average gain, right? So, or average close. So if you look at something like energy, that might stick out a little bit more because that's something that you're getting at a discount. If we look over at basic materials, that's your best performer. And look where that's sitting there. At the moment, it's not technically overbought. It is just like creeping in that overbought category, obviously above the 50-day moving average. But here's something where you go, okay, it's technically supported in the next month, and it's already in an uptrend. Granted, it's a little bit sloppy, but you look at something like that and you say, well, okay, maybe that's something I want to look at. Now, let's take a look at something like industrials. So that obviously has a good return as well. So if you were saying, I want to build some kind of portfolio that participates in this, industrials currently overbought, right? So you can use any measurement tool you like to see that they are overbought in the short term. So what you'd kind of hope for is that this continued to pull back and then you participate in that sort of late month rally, or you'd hope that there was a late month rally. So the moral of the story today is this is your historical average return over the last 20 years for each individual sector, but you of course want to consider where the sector is at right now. If we were to just zoom into something like even further into the even different categories and look at real estate, you go, well, it's a little overbought in the short term. I don't know that I want to dive into that, consumer staples and things like that. So hopefully that is something that helps you out. Or maybe you like that sort of thing. It doesn't take us long to put those together, and I'm kind of thinking of building a model so that we can share those kind of things with you more actively if that's something that you're interested in. Now, the other way to look at it is say, this is not necessarily a recommendation, but it's a way to look at your portfolio and go, okay, if financials struggle a little bit here, it's not necessarily a bad thing because they're doing well. They're just supposed to be a little bit out of favor over the next month. And like I said, a lot of that probably has to do with previous years where earnings were a miss across the board and this sector had pretty bad performance. This year, financials have actually done well through earnings, mostly, with the exception of Wells Fargo, they did well. All right, so we covered that there. What else do we have to cover? Tomorrow, you got earnings from American Airlines, Comcast, Freeport, JetBlue, Kimberly-Clark, Southwest Airlines, Procter & Gamble, Travelers Insurance, Union Pacific, Intel, and Skyworks, the semiconductor company there that is pretty closely tied to Apple. So we'll see how that goes. I'm sure there's going to be a question on this. Tesla, as at different moments in time today, Tesla had between $103 billion and $106 billion market cap. And you go, well, hey, that means Elon Musk can get paid because he's got a deal where when the market cap is over $100 billion, he can then start getting stock options again in a form of payments like $360 million or something. But there's a catch. The company actually has to have a 4-quarter trailing revenue of $20 billion. So there are lots of little minor stipulations in there that release those stock options to him. So not necessarily today is the huge payday for Mr. Elon Musk, although he has been through his fair share of hell. So he deserves what he's got coming to him, but he still has to continue performing before he gets access to what I believe in a total payout comes out to over $55 billion. Now, he's got to jump through amazing hurdles to get there. It's not like he's going to get that all in one shot, and they'll be paid out in the form of stock options as well. So that's that one. Wedbush upgraded them today. Price target of $550, I believe. 550 from 370, so you got the stock price obviously higher today. Very extended in the short term. All right, as far as dividends coming out to you, Williams-Sonoma, 48 cents, paying out, 48 cents. That's exactly it there. And I will take my shot here and see if I can answer some of your questions. I'll do my best. Luckin Coffee is still going strong there. I saw the pullback today, but yeah, in general, that's a great move. Today falling 8%. If a stock falls 8%, you tend to get a little nervous, but with a move like that, you got to expect profit taking. And when people start to take their profits, it becomes a bit of a snowball. That's why they say, like I mentioned yesterday, the bulls take the stairs, the bears take the elevator, meaning the elevator is faster to get down versus stairs going up. I like it. You like your Capital One there? Cool. Yeah. Oh, I saw Mark Cuban, saying he wasn't selling his shares. Yeah, he likes it. Yeah. Mark Cuban in the news there. You like Elon Musk there? Every other CEO gets paid no matter what. Well, that has happened in the past where CEOs have, what it is they get paid $1 a year salary and then they have performance-based benefits. Most CEOs get a salary plus benefits, but every now and then a CEO will come out and say, basically, we're going to turn this thing around or we're going to improve and everything. We're going to pay out to shareholders. They try to make a stand, grab some headlines and such. So that's the case. Speaking of which, CEOs, J.P. Morgan, Jamie Dimon today from J.P. Morgan came out and said he actually thinks stock prices here are justified and should continue higher given the overall economy and low interest rates. Yeah. Would you consider GT being undervalued at this point? Also at trading at a bit of a discount there. I believe they have earnings coming up, and so likely you won't see much action in terms of any upside excitement or headlines until earnings come out. But currently trading at a discount, yeah. You like the idea of taking some nibbles over several months there. Okay, cool. I can't blame you for that, especially when it's drifting a little bit lower. Everybody likes a discount. If Trump wins, do you think the market will continue? Yeah, the stock market is a Trump fan, or however you say it. They like Trump here. They expect him to win. They don't seem to mind other candidates with the exception of Bernie Sanders, Elizabeth Warren, but that seems to be fading away, at least for now. But the stock market is very much pro-Trump. And has proven that. So it's they obviously want him to win. It's good for business, good for the wealthy, and maybe good for the middle class if they happen to do another tax cut there. I saw his comments, by the way, on tax revenue and cutting taxes in half. That, unfortunately, is just not true. So I'm not one that picks sides, or I'm not going to bash one person and go favor for the other. But if somebody does something well, I'm going to cheer them on. I don't care if they're Republican, Democrat, or the guy from Starbucks. I'm just going to cheer them on. But when they say things that are not actually accurate and you can back it up with data, kind of makes you like, come on, man. Like, you didn't have to say that. Did you not know that that was the data? I get it. You're doing a lot. But tax revenue is actually much lower. We can show that. And taxes were not, in fact, cut in half. But maybe that's a video topic there. When trading option spreads with defined risk, why do brokers still require such buying power reductions? Such high buying power reductions? You might have done something wrong there. If you do like a dollar-wide spread, let's say, and you collect 50 cents, then that 50 cents is your buying power requirement. So I wouldn't consider that high at all. I think that's fair. You're basically being asked to put up what you could lose. And so I'm not sure what the question is there. I'm assuming you're talking about selling there. Yeah. What would you like to know about Chevron? So, a few words about Chevron. You like the discount? It's a very volatile stock now, so it's kind of like our Toll Brothers. We happen to own that stock, and it is more volatile than other stocks. Same with Chevron. It's more volatile. You got to expect a lot of back and forth, but in the short term here, to see that kind of a discount. Tomorrow, you'll likely see more volatility with the oil inventory numbers as well, but yeah, I mean, that's you got your hands full, right? You know that you're riding more of a Bronco instead of a cute dog or something. Yep, Fed's still going with their, we'll call it QE4. I know a couple people have already called it that, but the repo operations, a lot of people just calling QE4, but that's that. Oh, yeah. Hey, you know what? This whole impeachment thing, by the way, it ruined my jazz station. Every night I like to listen to the jazz station. I think it's NPR nationwide, but it's a low channel here. And they played the Senate hearing there for the impeachment hearing all night, man. It cut out my jazz, so I'm already a little frustrated. Anyways, I think that's all we got for today. I covered everything and a little bit more. I hope you enjoyed. We will be back, of course, tomorrow, but not Friday to do this again. And if you're one of our customers, we'll see you tomorrow night in the Speakeasy right over there. Come have a drink with us and let's talk nest egg. Enjoy the rest of your evening and keep us in mind. jazzwealth.com if you want to learn more about us. If you have any questions, you can schedule a call, send us an email, let us know what we can do to help. Enjoy your day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.